Welcome back. So today we're going to be taking a deep dive at the market madness. We're going to be looking at what's happened over the past few days, and we're going to be taking a closer look at the recent setups that I've given, as well as a market overview, and just plan what the next few days might look like. So the current fair price of Bitcoin sits at 65,920. Over the last 2 days, we've seen a massive 10% decline to the downside. So that has lots of people worrying. They're thinking, where is the price going? Is this the start of that retracement that all of us have been looking out for? Or is this just a mere retracement for some more further upward action? So we're going to be deciphering what's going on. And we're going to be thinking, well, in terms of this bull run, obviously we've got the halving coming up this month actually. Is this indicative of what is to come? Are we headed for 100k Bitcoin, or are we dropping down to the 30s and 40,000s? All right. So as I always say, it's key to plan your trade and trade your plan. So we're going to be looking at what our setups are going to be. But first things first, let's look at our recent trades. If we go on, some of the trades that's been given out recently, let's just analyze those to see how well they've done and just see whether we were able to enter each one of those trades. So trade number one, this is a very simple one. This is a Trinity Model 1 setup. We had our tap number 1, tap number 2, and tap number 3. And we said for this trade, well, we're looking at, entering this trade on the Trinity Model 2 if we get a change in market structure, so downside. So lo and behold, let's see what transpired. So that would have been a decent markdown, not the craziest markdown, not the most lucrative, but you would have netted a decent 2 to 3% off of that one if you entered around there. Okay, so that was trade number 1. Now let's take a look at trade number 2. So trade number 2 was this. Now trade number 2 was an April Fool's special. Why was it an April Fool's special? Well, it was because we were looking to enter this long off this 1 hour demand zone, but the positioning of the long was slightly weird, slightly risky. And it was risky, for those of you that follow this channel, we love to trade ranges here. It was risky because we were at the middle of this range. Now usually we don't tend to enter trades in the middle of the range, be it long or short. So we've got the range high, we've got the range low, and we are bang in the middle. So this was a risky one, but nonetheless we had this 1 hour supply. Now not only did we have this 1 hour demand, not supply, demand, we also had this 45-minute divergence. It was a hidden divergence. You can see as price is headed up, our momentum waves on Market Cipher is headed down. Now Market Cipher is an indicator that I use just for my confirmations. Excellent indicator, and completely changed the game as far as my entries go. So we're looking to enter on this level. Now we did say before we enter on this level, we need to see a clear change in market structure. Now Bitcoin did something weird here. Bitcoin gave us a change in market structure, let's say on a 10 to 15 minutes. However, it had one further leg down. It had a 5-minute demand zone over here, which it wanted to tag before it went through. So anyways, we're going to see what happened with this trade and just see how that played out. So here we go. Okay, so as I said, we had one more leg down, and this level was confluent with a 5-minute zone. Okay, we had a 5-minute zone here, and shortly after that, we had that rally up. Although, if you did enter off this 1 hour demand zone, you would have netted a good, I'd say 1 to 2 risk to reward, which isn't the best, but you could have entered that trade, and as soon as you saw a change in market structure here for a bearish shift, you would have been able to exit that trade. Okay, but the real long came from here. We had a decent, nice long up there. All right, so that was that trade. Let's see if we had any others. Okay, so we had one more, and this was a juicy one. This is what led to the reaction we're currently seeing at the moment. So what was this trade? Well, we could see on a 4 hour, we had a high, we had a low, okay, and then we had our 4 hour change in market structure. We rallied up, and then we seemed to form this bull trend line. Now this bull trend line followed by this bear trend line. And when you have a bull trend line and a bear trend line in a symmetrical fashion, we call that a symmetrical triangle. And what happens? Well, a symmetrical triangle can either break up or it can break down, but we are not looking to enter on the break, are we? We're looking to wait to see if we get a retracement. So here we have trade number 1, trade number 2, trade number 3, trade number 4. We said 1 or 2 would most likely happen first, okay, and they involve a breakout of this triangle. But before we enter this trade, what are we waiting for? We are waiting for a retest of that trend line. So if we break up, we need it to retest and head up. And if we break down, we need it to retest and head down. That's the confirmation. That's where we're looking to enter. So let's see what happened. All right, so what happened again? Bitcoin loves to do this. It was a bit tricky because we actually broke up, all right, but we did not get the retest. And shortly after we broke up, we broke down and then we got the retest. Okay, so that retest would have entered there and you would have marked that down for a decent juicy trade. That would have netted you around, I believe, 8. See, we've got 11 written reward on that one. So that was the juicy trade of the week. Okay, so there we have it. So now we're in this zone at the moment. We've had our reaction and we are reacting off this Fibonacci zone that we talked about in my last post. Now this Fibonacci zone is a very key zone and we're going to be talking about that shortly. So where does this leave us as far as Bitcoin is concerned? We're starting to see bearish signs. Are we headed to the 30Ks? Are we headed to the 20Ks? What's going on? We've got halving coming up. We should be rallying up at this point. What is going on? All right. So we're going to be looking at the market structure. We're going to be looking at supply and demand. We're going to be looking at liquidity. And we're also going to take a look at what our indicators are saying. Now, Bitcoin is playing a very interesting game at the moment. And so you really need to take your time, when you are analyzing the charts. So first things first, let's take a look at the higher time frame. So we're going to ditch this chart for now, and we're going to head to a clean chart. And we're just going to take a look. We're going to do a top-down analysis right from the top all the way to the bottom, just to see what Bitcoin's up to. So we're going to start at the monthly, all right? Now on the monthly, I've been saying this for months. Now on the monthly, as far as the bull cycle goes, we've had the uptrend, we've had a low, we've had a high low, and we rigged it up, we've changed market structure. Now, as we have changed market structure, we expected a retracement, didn't we? We said that retracement could happen here, it could happen here, it could happen there, but it never quite came. The retracement did not come. And instead, what we've done is we've tagged this all-time high at 69,895. And we said, right, we are looking at this level to see what's the reaction going to be at this level. Are we going to break above this level? Are we going to wick and rotate down? We said if we get a wick, that is not the most bullish thing in the world, because if we get the wick, it means we could potentially rotate all the way down to the bottom. So good news, we did not get the wick. We have closed above that level. Okay, as we can see, we've got that bar and it's closed above that level. But it's not a very convincing close in the sense that we have closed above that level, but we have, followed by our bull trend bar, we have our bear trend bar that we can clearly see. Okay, so whilst we've closed above that level, we are seeing some bearish signs in a local time frame. Could this be just a pause bar for some more further action? We have to watch to see what the follow through will be like. Okay, now that's what the monthly looks like. Now let's take a look at the weekly structure. On the weekly, we can analyze this leg, this last monthly leg, because there's no point looking at what's gone on over here. If we analyze this last weekly leg, we can see that our weekly structure in green looks like this. We have a higher high, higher low, higher high, higher low, higher high, higher low, and then we've had this massive higher high, okay, this massive leg up, which we are currently seeing at the moment. Now, just a quick tip, just to understand, if you ever wanted to understand the sign of a strength and on how strong an uptrend or a downtrend might be, a quick nice tip, it's always worth looking at what I call the amplitude. So how far up has your price gone from your breakup structure to your swing high? So our first rally up, we had 37%. If we look at our second rally up, we're looking at 57%. And if we look at our third rally up, we're looking at around 45%. Okay, Now we had an increase from the first one and a decrease from the second one. But this is still quite a large amount. So on the weekly, we still have this clear uptrend and the amplitude is quite high. What we would expect to see if we were getting a change in direction is you'd want to see waning amplitude. So you want to see the amplitude decreasing steadily, over time to the point where you're having maybe less than 10%, less than 5%. But it seems as though on the weekly, we're still in a very strong uptrend, okay? Now also, what you must notice is that on the weekly, as we are breaking structure, we don't seem to be coming back to retest our old range, okay? So our break in market structure, it seems to be quite aggressive. So we're pushing and pulling away from our range structures, which is quite bullish on the weekly time frame, okay? So now let's take a look. On our weekly time frame, we can also see that our last weekly high low is coming in at around 39,019. Okay, so this is a level we need to break on the weekly before we can even consider any bearish action. Now, if we were to wick this top and change market structure, then our weekly level would have been at around £60,000 dollars, 60,800. All right, but that's not the case. As presently constructed, our weekly is still all the way down there. So that's what the weekly has been up to. So next, let's take a look at what the daily looks like. Now, if we analyze the daily market structure, we're not going to go all the way far back because we don't need to. We're just going to look at this decisional leg, this last weekly leg, to analyze what's going on. So our daily structure looks like this. So on a daily structure, we've got this in purple. Now we can do the same thing here. We can analyze what's happened on the daily. So on the daily, let's see what the amplitude looks like. So what we have, first of all, if we go from our break of structure to our swing high, we have a 20% rally up. We go from our break of structure to our next swing high. We don't have a low here. We do have a bear trend bar, but that doesn't count. We have about a 39% rally up. So on the daily, it seems as though we have increase in amplitude. Okay, so on the daily, we are still on this uptrend. We're on this tear up. And it seems as though, the bulls are really taking control here. And it's rallied up to this all-time high in a very aggressive way. So what does this mean? Well, this means that before we are even considering looking to go to these lower 30k levels, we need to take out the weekly. Before we take out the weekly, we need to take out the daily. All right, before we take out the daily, you guessed it, we need to take out the 4 hour. All right, so what we're going to look at now is what the 4 hour structure actually looks like. But on the weekly, we can see that we still have some strength here. So we're going to get rid of this. We don't need to review the weekly anymore. We'll leave the daily in there. All right, so what do you think we're going to do now? So now we're going to analyze what this decisional leg looks like. We're going to analyze this leg of structure to see exactly what's going on. And we're going to look at that on the 4 hour. So here we have it. So this is what our 4 hour structure looks like in red, okay? It looks a little bit scatty at the moment, so I'm just going to talk you through it. So we have a 4 hour higher high, higher low, higher high. We break that low, we don't close below that level, so we continue upwards. We have a higher high, we have a higher low, and then we actually break market structure right around there. We have our first break in 4 hour structure there, okay? Now what does this mean? This means, we should expect some more downward action. But remember, as I said earlier, to understand when a trend is coming to an end, you're going to see it based on the amplitude. Every impulse, it's not going to be as prevalent or as aggressive as the prior impulse. So let's see if that took place here. If we analyze this 4 hour structure, well, what can we see here? We can see, first of all, that our first break of structure had an amplitude of 20%. Our second had an amplitude of 6%. Okay, that's decreasing. That's already gone down. Now let's look at the next one. Our next one is about a 6%. Okay, so quite similar, still quite low. And then our penultimate one is about 0.6%. So what do we expect? This is a sign that we're very quickly going to get that change in reaction. And that's exactly what we did on the 4 hour. So on the 4 hour, we got that change in market structure that led to the break. All right. Now in a downward fashion, we had a similar thing, decrease in amplitude, which led to another 4 hour break. Okay, now we had a range high over there. We had a range high over there. We had a range low over there. And then this breaking structure, we retraced, rallied up, we came up to this 24-minute zone, and we started to distribute here in this range, okay? Well, as soon as we distributed in this range, what did we do? We formed a bigger range. So what have we got here now? We've got a range within a range. So this is the big range, this is the small range, okay? As soon as we have that, I can now mark out my range high and my range low. So this will get us to understand what Bitcoin has been up to. So what I'm going to do now is I'm going to get rid of that weekly level, and I'm going to keep the 4 hour here. So we can see that reacted off this 24-minute supply zone, but we reacted in a nice juicy way. You know, we distributed with a nice Trinity model. We had tap number 1, we had tap number 1, tap number 2, and tap number 3. We had that flush down. All right, but understand that that flush down, you know, is just facilitating this 4 hour move, because on a 4 hour we had a bullish change in market structure, a retracement leg up, a first impulse up. What do you expect after an impulse? We expect a retracement, and that retracement seems to be what we're observing here, and this could lead to more further upward action, at least perhaps to this old range or to this range high. So that's really what's going on. Now, am I saying that Bitcoin can't rotate and test this range low? No. I'm saying that there's a higher probability that we do get a continuation here. But of course, this is trading. Anything is possible. All right, so what's going on here? We seem to be getting a reaction of this 1 hour demand zone. And not only are we getting a reaction of this 1 hour demand zone, which is our next higher low. Remember, we've got higher high, higher low for continuation upwards. Not only are we getting a reaction off that zone, actually this zone, we've also set a nice range here, and a range with an accumulation model. We've got a range over here, okay, and we have a tap 1, tap 2, tap 3, off we go. We've broken structure, we've broken out of this range. Are we going to get a retest for that continuation upward? Now, that's exactly where I'm looking for my next trade. I'm looking for my next trade at this zone. We have a 1 hour zone there. If we go on a 1 hour, we can clearly see that 1 hour order block. And we also have a 5-minute zone that's inside that 1 hour zone. So I'm looking at these levels for my next trade, okay? So that's what we look like as far as a structure, all right? So now in terms of my next bull trades and my next long trades and my next short trades, well, it's very, very simple. Trade number 1. So for trade number 1, of course, we're in a range, we know we're in a range, and because we're in a range, we're always looking for a reaction of our range high and our range low. So I'm going to set my alert there. I need to set my alert at the range low as well. Now this range low, if you look carefully, we also have a 24-minute demand zone. So that's a juicy place for a reaction. But in the case we come down to this range low, we would have broken structure on the 4 hour. And if we break structure on a 4 hour, that's something that you need to be cautious about. So that's trade number 1, trade number 2, range high, range low. Trade number 3, of course, is the zone. We're already at the zone, so I'm not going to set an alert there. So we're already at that zone, looking for a reaction here. Okay, so I'm just waiting for price to rally down slightly before we go further up. Okay. Now for our next trade, there is one more trade, which is a short trade, and that short trade is looking at this level here. I'm just going to mark in these potential trades so that you guys have something visually to work with. So we've got the long there, and we have the short there. Okay, I'm going to tidy this up and repost it so you all have this. And then we also have a long here. We have a long position from the zone we're currently in, which we're watching closely. Okay, but I have one more trade which I believe is a high probability trade, and that is we have a 2 hour zone here. But not only do we have a 2 hour zone here, it is confluent with our fixed range profile. Our fixed range profile, if we draw that for this zone, we can see that we have that confluence with the value error low and the POC within that level. So that's where I'm looking for my next trade as well. All right, so I can draw that, but I'm going to draw that in a second. But also, why am I looking at this zone? If we actually take a fixed range pull from the entire range, we can see that we have a level there as well. Okay, we can see we have a level there as well. All right, so those are my trades. That's what I'm looking out for. Remember, for each one of these trades, you're looking for clear market structure change, and you're looking for confirmations, however you use your confirmations, be it bearish divergences, bullish divergences, RSI, moving average, whatever floats your boat. But just make sure you have your confirmations before you get in. Okay, so there you have it. If you found this content useful, don't forget to follow and boost just so you can get more timely updates like this. Thank you.